Welcome back to Business Bootcamp. Today, we will be learning about personal finance. Personal finance consists of the discussion of different types of loans, taxes, mortgage, and more. Student loans can add up to hundreds of thousands of dollars. Luckily, there are many options that a student has when deciding how to pay for their schooling. Federal loans are loans from the federal government and are the most popular choice when borrowing money for college due to the flexible repayment options and low interest rates they offer. Student loans are also known as Stafford loans. There are two types of Stafford loans: subsidized Stafford loans, which means the interest will be paid by the government until you graduate college, or unsubsidized loans, which are when the student pays the interest of the loan as they are schooling and as soon as the loan is taken out. Another type of loan is a PLUS or Grad PLUS loan, which is also a federal loan, except there is no limit in how much money is taken out. Typical student loans have a limit of up to $33,000 to $66,000 that can be taken out, depending on whether a subsidized or an unsubsidized loan is used. Then, there are direct consolidation loans. Direct consolidation loans allow the option to put together all your federal education loans into one big loan to pay off monthly, instead of paying off multiple education loans. Finally, there are also health professional loans, which are subsidized loans that are specifically given to pupils who are studying to have a profession in the medical field. Private loans are typically funded by banks, state loan programs, or other loaners. Private education loans is an option to students and parents when the government does not lend enough money to provide for a child's college education. Because federal loans have limits to the amount they can loan to students, private education loans, also known as alternative education loans, can provide a bigger loan, helping out families to send their children to receive a higher education. The three types of taxes we are going to discuss today are proportional taxes, progressive taxes, and regressive taxes. Every state has a specific sales tax that is paid when you buy a good or service. Sales tax is one example of proportional tax, where the same fixed percentage is taxed on everyone, no matter their financial state. Progressive tax is completely different, where it is based on income. Lower tax rates are given to low-income families and vice versa. Higher tax rates are charged to high-income families. And finally, there are regressive taxes, which is the complete opposite of progressive tax, where the low-income families pay a higher percentage of taxes compared to high-income families. Credit cards. They may be small plastic rectangles, but they hold a lot of power. They are typically given by banks and sometimes big companies. With a credit card, you can buy anything, but all your expenses goes into a bill that you have to eventually pay back to the bank or the company you got the credit card from. You can think about it as a loan, where you use the credit card's money and have to pay them back in a monthly statement. Then, there are mortgages, which are loans usually taken from the bank in order to buy a house. Each month, you would pay back the bank with added interest to keep your house. Taking loans from banks, lenders, or the government can be extremely risky, but at the same time, necessary to pay for your needs. Before making the decision to take out a loan, it is best to take time to research and really think about the different options you have. Talking about it with someone can help you think deeply about all the pros and cons to the decision you are trying to make. Not only does this apply to personal finance, but it can also apply to other situations. It is extremely important to have a budget. You never know what changes could happen, and having a budget can help you keep track of your money and what is going in and out of your wallet. You can use a spreadsheet to cleanly lay out your expenses and deposits to have a visual on how you are doing financially, or you can simply just write it down on a piece of paper. Being organized with your money will definitely help you in the future in case a major financial change occurs. Having a budget can help you recognize if you are spending your money wisely too. That's all for today's lesson. To learn more about finance or other business topics, you can go to our website, www.businessbootcamp101.org. See you soon!